Okay, so I got a little bit of feedback from the BWN Influential Business Women's Networking Retreat last week, and this was something that weighs heavily on people's minds. So I thought, why not provide some type of webinar or series that dives a little deeper into this subject matter? So I'm just going to jump right in. Thank you for showing interest and allowing me to sort of deep dive with you on something that isn't as complex as you might think it is. I don't want it to feel like it's adding work. It's really just opening the doors to more strategy, maybe more questions you can ask someone like a CPA or a business advisor, an accountant, someone, anybody that is involved with your business that is on the side of helping save you money and taxes and write-offs should know a little bit about some of the subject matter that we're going to get into. So I'm going to jump right in. So I call this, you built the business, right? Now let's build the wealth. And this is the part where everybody sort of struggles a little bit. Building the business, having the dream and the passion, but you now once you get to a certain point, financially speaking, cash flow is positive, revenue is pretty trending upwards and consistent. There is like this nagging thing, right? This voice in your head that's like, okay, where should we be storing some of this money, for a rainy day? Because our business can be volatile sometimes. We maybe need to have it sitting somewhere in a safe savings account. Or what about an investment account, a retirement account? These are things that sometimes just fall through the cracks. See it all the time. So cute little pic of me, local advisor. I'm an investment advisor here in Baton Rouge. If you don't already know me, I work with my dad at BF Anderson and Company. That's our family firm. We're right off Acadian. But sort of my initiative, my passion has sort of pushed me towards financial literacy and empowerment for women, new investors, young business owners, or people just getting their feet wet. So this is something that I think is a very common trend. And I hate to point out women, it's just too easy. But, like my mom or friends of mine that are fantastic business owners, like I hear this type of like thought process, this mindset a lot. And I've been there, you've been there, there's nothing to be ashamed of, but like, yeah, money does give people anxiety. We have made mistakes and feel embarrassed about it. The market can feel chaotic and you don't want to lose everything. Retirement feels like a million years away. Let's live in the now, YOLO. Okay. So it's a mindset shift that women struggle with. And I'll go deeper into that. So let's just jump right in. Cash flow reality. So your business income is not a retirement plan, meaning, yes, you're finally hitting your mark. You're trending. Money is coming in the door consistently. You have regular clients. They're referring you, so on, so on. That's fantastic. Okay. But you got to remember in the back part of your mind, that's going to pay today's bills. That's going to cover payroll now, keeps the lights on. And it depends 100% on you working or the people that you have hired to continue your legacy or your business for you. Are you fully sure that that can keep you going for the next 60 whatever plus years? uh, that's why this missing piece of the puzzle is going to be a investment account that is tied to your business. It just is a part of the equation. You need to have it going on behind you in the background while you sleep. It's you don't need to go get a second side hustle or another job or start another business or go buy 10 rent houses. Okay. You don't need more sweat equity in your life. You're already killing yourself as a small business owner. So having this sort of passive thing going on in the background that historically speaking returns anywhere from 8 to 10% annualized, that is a nice little chunk of change over time if you are consistent and disciplined with it. And when I keep saying the market, I mean the stock market. I mean putting your money in something that does fluctuate, does go up and down. It's based on thousands of companies, whether they're doing well or not. Are we in a war? Is the president making good decisions for the middle class as far as like fiscal policy and economic changes? There's so many things that fall into it. But overall, generally speaking, when you invest in the stock market over time, time in the market, you are going to walk away much wealthier than had you never touched it. Okay. So wealth, it grows while you sleep. It creates options. It funds your retirement. When you're 60, 65, baby, you don't need to still be working, or at least your job or your business at that point should be a pleasure, not a thing sitting on your shoulders. If I don't keep this business going, if I don't keep all these balls in the air, it's on me. It's on me. You can't. So this is a backup plan, or this is your backup plan. This is your golden parachute, right? Um, so here we go. Now, LLC, great start, protects you, but it does not optimize taxes. So it gives you credibility, it creates legal separation, it adds structure, and it protects your personal assets. Someone that sues you, a client that sues you, they can't sue you personally. Okay. They got to sue the LLC. And if you're just getting started, good luck. You're not going to get much out of me. But the part that people miss, okay, is that your taxes stay the same no matter how big your business gets. So this is where you need to make sure you are working with a tax strategist, someone who's really looking out for your best interest. And that could either be an investment advisor, a financial planner, a CPA, maybe a combination. Somebody in your corner somewhere should be saying something. Okay. So let me just break this down for you. $100,000 profit. We're just going to use even numbers here. Um, Income tax will say you're at a 25% tax bracket, just for even, just easiness, easy math. So that's 25,000 that's coming out of that $100,000 profit. You can't avoid that. That's federal state income tax. But then you have this sneaky little bugger, the self-employment tax, okay? And that's a combination of Social Security and Medicare. And as an LLC, you are paying taxes like a sole proprietor, meaning you are paying the full 15.3% as the owner of this business. So tap that onto this 25%, 25 plus 15, you get the math. It's a big chunk of your money. So 100,000 feels much more like 59,000 that you're taking home. Okay. That is like taking this crisp, nice $100 bill here and just going, oh, uh-oh. Yeah. Let that sink in. Okay. Um, okay. That wasn't real money. So, anyways, this is what I want you to understand. Next slide, S Corp. If you haven't heard about this and you've been in business for a little while, you need to go yell at your CPA. I'm serious, because this is just very basic stuff. And if they're not talking to you about this when you're starting to really hit your stride, something is wrong. So, all right, let's look at the same deal here. $100,000 profit. Income tax stays the same. Now, what's going on is you're not paying that full self employment tax on all of your money, because now choosing to designate your business as an S corporation allows you to pay yourself differently. So, still the same business. You're still an LLC, right? You're just choosing, you're designating, this is a tax designation. It doesn't change that you're an LLC. Okay. So just trying to make that make sense, right? But you're paying yourself in two different buckets. One bucket is going to be your reasonable salary. The other bucket is called your distributions. Reasonable salary is where you're going to pay majority of your taxes on. That's going to be payroll tax and income tax. So it's still got Medicare and Social Security tucked away in there, and of course your income tax, but it's only on that chunk. So in most cases, like when you're determining what a reasonable salary would be, if you're making $100,000 and you're paying yourself as a W-2 employee, even, and you also own the business, that's how it works. It's a little more formal, but it's not that complicated, and it's worth it if you're at this point. 60, let's say 60,000 is what's considered your reasonable salary, and that you get to determine that. That 60,000 is what the taxes are going to pull from. Now, your distribution amount, let's say that's 40,000 of the 100,000, that is only going to pay federal, state, and income tax, no payroll tax. Okay. So that's a nice little chunk potentially that you can save on taxes. So you're looking at more of a take home of 66,000 versus the 59,000 that we saw on the other slide. It just, over time, this stuff starts to build up and it starts to make sense, and you start to see more money and more stuff in your savings. So same business, different tax outcome. I just really want to emphasize that. So when should I become an S corp, Amy? Okay, the move is about timing, so don't rush. Don't feel like you have to go freak out tomorrow and do this. Like this is something you can plan over time. I've watched plenty of small businesses do this. An S corp usually makes sense when profits are consistent. So realistically speaking, before taxes, you're seeing about 60,000 and up of just consistent trending income. Your books are clean, you're not being cheap on that. You're willing to run payroll. It's a lot easier than it used to be. And a CPA is involved. I really emphasize this because I'm not a CPA, I'm an investment advisor. I'm here to grow and make you money. CPA is who has got to take liability for you with taxes, and they should really be helping you strategize how to keep more of your money in your pocket from Uncle Sam. So you really need to consider what the savings are and if this is the right move for you, because it may not be enough in tax savings to make sense. If your CPA is charging you an arm and a leg to start making you an S corp and payroll is too expensive and all these things, then maybe you're not at the right point. But I would say most CPAs and myself would observe that anywhere from 60, 70, 80,000 and upward, you want to start strategizing as an S corp. So basically, what's happening here is you are getting tax savings, right? Which creates margin, your breathing room. And look, now you've got money to invest that you didn't have to go pull out of, separately out of your income. So it's all about protecting first, creating the right structure around your business, and then you grow. So the most powerful tool that we use, and we're a small business that designates themselves as an S corp, is the SEP IRA. It's ideal for solo owners and small teams. It's funded by the business. That's why it's really good if it's just if it's a small business, maybe one, maybe two, three people. You can put away as much as 25% of your income or as little as 0%. It's very flexible, very easy to open up, very minimal administrative work involved in opening a SEP IRA that is attached to your small business. And another amazing thing is that if you decide, okay, we're killing it this year, we're going to pull in 100,000, whatever. I want to take 25, and I did well last year too. I want to take, 25% of my W-2 income. So like I used in the previous example, let's say that your reasonable salary as an S corp is 60,000, total is 100,000, but the big piece of the pie that you're going to pay the taxes on is that 60,000 cut, your reasonable salary. Let's say you want to do 25% of 60,000 and sink that in an IRA in the background to grow, invested in the stock market, or ETFs or mutual funds or bonds, whatever. And that 25% of the 60,000, which I think is 15,000, shaves down your income to 45,000 now. The W-2, the government is seeing that you've only made 45,000. So you get a tax deduction immediately, for your business, and you've got money growing in the background that you can lay your head down on a pillow at night and go, I'm doing everything I'm supposed to do in the current moment and for future me when I'm 65. So it converts business profit into personal wealth. It's very important. There's other things, simple IRAs, personal accounts. I don't have enough time to really go into those today. I'm sure you're familiar with Roth IRAs and traditional IRAs. They don't really have anything to do with the business per se, and they have very low contribution limits, 7,000 to 7,500. But they're good starting points, and I think everybody should have one or the other. I have a Roth IRA and a SEP IRA and a taxable brokerage account because I like having threes. Um, Simple IRA is something that can work with a business. And if you have questions about it, reach out to me. I can talk to you more individually on that. So your business should fund your future, not trap you in it. Super important. Keep that in your brain. So big picture, retirement does not happen by accident. Cash flow does keep things running. Strategy creates the options and the freedoms to allow you to choose how much you work when you are in your golden years. So investing turns today's work into tomorrow's options. So the goal isn't to work forever, it's to choose when you don't. This is a great visual. Okay. I found this on NerdWallet. It's just a compounding calculator. I'm sure I could buy one or whatever, but why not use what's free? So this would be assuming a $7,000 investment over 30 years with, like I said, the hypothetical return of 10%. And let's assume that you're going to be a good person and put 7,000 away every year to fund your future. So that math is 210,000 that you yourself have put away for 30 years. Okay. It's a lot of money. You could just put that in a savings account. It's not going to return much, but it's safe, right? But you got to think about inflation and taxes and all the things that really do eat away at your money, the invisible thieves, right? Now, look at what this does. Okay, this blue line is your 210,000. This green line is all of the money, all the profit that was made by a return of 10% because you had 30 years to grow it. You netted an extra 1.1 or 1.2 million dollars on top of your 210,000. So I mean, this speaks for itself. This is not magic. This isn't fake. This is what compounding interest over time, this is what investing can do for a business owner or an individual if you just stick to it. You don't need to go throw your money at things you don't, that you have to put like all this time and effort and sweat into, your one business that you're really good at, focus on that and be really good at that. But then have the money that you're saving invested in the background and growing like this. And you too can have freedom in the future. So, this is the best way to stay in touch with me if you're not already following my Instagram account. Calendly is a way to book with me, but you can also just email me, scan here from my website. And then my presentation was created by the lovely Lauren at 717 if you're interested in working with her. But if you have any questions or you want to dig a little deeper, feel free to reach out. I'm always happy to talk. And I will see you later. Bye.